Hi, it's Lee and welcome to the Tesla Economist. Tesla has just had its 12th consecutive day of gains. That is a new record. We managed to break through $250 again, but it closed slightly below. The momentum is still going. It really feels like the market wants it above 300. It is Tesla after all, the company that has the potential to be bigger than any company in history. Perhaps it should be a $1 trillion company at least right now. The potential upside outweighs the downside. Perhaps a 10 times return by the end of this decade, at least many fanboys would agree. And even if Tesla can ramp up Mexico and the next new factory, we're at around a $7 million a year run rate. With $10,000 gross profit average per vehicle perhaps, that's $70 billion a year. If you include energy and other parts of the business, then it's probably about $70 billion a year in earnings. With a PE ratio of just 30, then it's still over $2 trillion valuation, or about 3 times what it is today. Still not a bad return on investment. And that would be if bots or FSD didn't have any effect and we're only at a $7 million a year run rate, not the alleged 20. Before you say that is far too pessimistic, remember I was just weighing up the downside against the upside. This week could be volatile as we have CPI data coming, but it would seem the consensus is that the Fed will pause rate hikes, or perhaps wishful thinking from fund managers. If that occurs, it sounds like a lot of investors are going to price in rates starting to be lowered later in the year too. Whether they will or not is something else, but it's irrelevant as long as the market believes it for now. Of course, lower rates mean lower interest rates on vehicles. If cars cost less, then demand rises. And Tesla will benefit from that, as will the stock price. Technical analysts are saying that Tesla's next gap is 270, a price tag we may hit this week if CPI data is that good. Once there, then we aren't far off 300. And surely the market will test 300 as much as it can. Investors are feeling more confident that the Twitter overhang is sorted, and let's face it, Twitter is one of the biggest reasons the stock got down to where it was initially. Then concerns of Elon selling more stock again, if Twitter was in as bad a scenario as Elon was describing. But it sounds like Twitter is no longer a massive cash furnace, and Elon has found a new CEO, along with reassuring investors that he is staying with Tesla. It's strange how the FUD of Elon leaving Tesla catches on at times and the rumours spread. Sure, most of us didn't believe he was going to leave, but the sentiment had gotten out, as we could clearly see how the stock reacted when Elon reassured investors he was staying. Yet he is still running Twitter today, so that might imply when the new CEO actually is in play that Tesla stock may feel even more confidence that Elon is still behind Tesla. Tesla is changing the world, and it takes time to scale to this level. I'm sorry, but if you were looking for a safe, reliable, solid compounding stock, then Tesla was not for you. It's highly volatile, and it will bubble again and again. Is Tesla about to bubble now, or is it just returning to where it should be in the market? I'm of the belief that Tesla did somewhat bubble when it hit its all-time highs. Well, there was definitely an EV bubble. I'm sure everyone can agree with that, and we've seen what happened to the companies that were not capable of making and ramping profitable EVs. They're now worth a fraction of what they once were. No one can argue with that. Therefore, I think it's safe to assume that Tesla's stock price did ride that bubble also, just like Microsoft, a legitimate software and tech company, rode the dot-com bubble and didn't return to that high until 14 years later. Bill Gates was worth $100 billion back in the 90s, if you'd believe that. So richer than Elon Musk is today, adjusted for inflation. Of course, Amazon also rode that bubble, a legitimate e-commerce company, and is worth about 30 times its high today from the dot-com bubble. The thing is, when Tesla did hit its all-time highs, the numbers still looked good when you saw the potential that was still to come, with demand looking so strong with a huge backlog and new technologies, manufacturing techniques, and government intervention that were going to double gross profits in the new production facilities. Tesla's stock price still looked good, whether it was a bubble or not. Why? Because the market had not priced in this future potential, and it was right somehow, as the potential didn't come into fruition. The Inflation Reduction Act didn't show us a massive jump in demand. The new factories didn't show us a reduction in cost of production or increase in speed of vehicles coming off the line. But at the same time, as amazed as many of us were around Battery Day, the stock didn't do anything back then either. It's not like it doubled or tripled as a result. In fact, Tesla was still trading around $150 at the time of Battery Day. The market didn't care about the potential. Same with Autonomy Day. It was potentially more the EV movement and climate change movements and targets from governments that made the market take Tesla into the highs. For the last couple of years, Tesla has been trading around close to 300, aside from a few dips. This might be where it naturally gravitates to. Except since the last couple of years, we have seen a few things. We've seen what we might call a recession, at least for the auto industry, and seen Tesla at its worst for the industry. At least we hope it gets better from here. Sure, there can always be worse, but relatively, it's the worst the auto industry has been for some time. And demand may not be as high as we might have thought, but it is still holding, and Tesla is still generating profits, which is much more than we can say for others. In fact, to see Tesla still generating billions in profits during these times when Ford and GM or even Rivian or Lucid are struggling to make their vehicles for even less than twice what they sell them for is reassuring. Tesla just need to increase sales, which can be achieved by offering more range of models and getting costs down in order to lower prices, all of which is Tesla's mission and is what Mexico is all about. So if we see Tesla back around $300, is this a bubble again, perhaps brought on by AI? Or is Tesla just getting back to where it should be now a lot of the fear has subsided and we're left with the most profitable EV company on the planet with plans to grow production to significantly higher levels over the next few years? And yes, of course, the autonomous side, which in the past has added little value onto the stock price. But people seeing things like ChatGPT and the proliferation of other AI services and products on the market is starting to spur the potential of autonomous vehicles, an industry that Tesla clearly leads. There is little reason for Tesla's earnings to increase over the next year, or potentially even longer. Cybertruck line will affect profits until it ramps. Then when it is ramped, Mexico will be running and pull down profits also. But eventually, those two lines will start compounding into earnings, and as long as Tesla shows consistent ramping from those factories, then the market can work out the numbers to come. Besides, we'll be seeing revenue grow over that time too, along with production numbers, and energy will be making more of a contribution, although it may not be quite the saviour some bulls were making it out to be, but a nice supplement nonetheless. So if $300 is about the right natural price for Tesla stock these days, and it's not a bubble, then it's still a good target for potential bubbles. Tesla's progress in FSD is only going to get better and start to amaze more and more people, and I'm not talking about the next update, but thinking more about like 1 or 2 years' time. The same for Tesla's demonstrations when it comes to robots, and then the broad industries of AI becoming exponentially more impressive, and by association generating more excitement for Tesla. Once we are at 300, it's only something like a 36% increase to get back to all-time highs. If we look like we have broken the back of inflation and look like the economy will enter recovery, then Tesla will look even more tempting to many investors. The other tech companies are close to all-time highs already, and they don't have plans for as much growth as Tesla. Remember, we're at a run rate of about 1.8 million a year. Current factories have a total of around 3 million when ramped completely, then another 5 million units of the 2 new models that Elon told us. Those numbers get big. Hi there, I'm using Verbalate AI video translation and lip sync software. It's pretty amazing. Watch this.
I can translate my videos into other languages. For example, I am now speaking Hindi.
नमस्ते, मैं पहली बार हिंदी में बोल रहा हूं, लेकिन Verbalate इसे इतना आसान बना देता है.
Or how about Spanish?
Hola, vaya, increíble.
También puedo hablar español.
Sign up at verbalate.ai today to gain early access to trial the product for creators and strategic partners, and gain the ability to translate and lip sync videos in all major languages. You can view the info in the description below.